Hello, everybody. Welcome to the market close, Friday, February 2nd, 2024. Folks, we have had one hell of a 5 hours in this market since we last talked on the market open because Nvidia can't stop going higher. Like there's something in the water that Nvidia drinks. It just does not know how to stop. Another 5% day on Nvidia. Apple continues to drop. Google continues to drop. Meta continues to keep its 20% gains. Amazon continues to keep its 7% gains. Overall market S&P right now, I haven't checked in like 20 minutes, but I think it's at 493, 495. S&P is up 1.17%. We're basically 5 points away from 5,000 on the S&P. Just insane. Incredible market performance today. So we're going to talk about it, break it down, and kind of figure out how this is happening, why this is happening, and keep going from there. Nathaniel, Alex, Joshua, Matt, Ray, Midwest Puzzles, Scott, what's up, man? Belly Pork, Jason, Josh, Vlad, Jason, Carl, Midwest, David, Eric, June. This guy makes too many videos. Eric is new to the channel. Eric, thank you. Thank you for being here. General Weenus, I love that name so much. Ephemeral Phase, Kelly. Oh my God. Kelly's actually here, finally supporting my content. Kelly, thanks for being here. Castrimo, Ashwin, Cameron Vincent, Tony. All right, folks. First thing we got to do, as I promised yesterday, I got two of these here. Okay? You guys are going to tell me which one to drink. We have sparkling watermelon, and then and they're both cold, sparkling kiwi. Okay? So, I need to know, put in the chat. I'm going to do whatever one the chat says. Yesterday's pineapple was disgusting. I'm trying to change my mind on this. And so I need to know either sparkling kiwi or watermelon. Which one? Sparkling kiwi or I kind of want to do the kiwi one. I think that'll be better. But please let me know if it's kiwi or watermelon. Kiwi? Okay, Matt, I trust you because Matt's so I'm not listening to everybody else. I'm trusting Matt. Matt's the biggest shareholder of Celcius here. So I'm trusting Matt. They're both bangers in it. 2 of you say watermelon. 3 of you say watermelon. 2 of you say kiwi. Stone cold that shit, dude. Could you imagine stone colding this? All right, we're gonna do kiwi. Here we go, Matt. I'm trusting you, bro. This is my DD. Now, look, I did a lot of research today on Celcius this morning. I'm actually seeing the vision for Celcius. Okay, and I'll share that probably next week. I'll go deeper into it, but I'm getting ready to buy at least a small amount, but like a decent amount for me. I actually think there is an argument here for Celcius. I really do. Even though I have not personally liked the drinks, and we'll see if I end up buying it maybe by mid-February as I clear up some more capital. But we'll see. Here we go. Kiwi. Okay, kiwi. Let's see it. This better be good, bro. All of these drinks have been so bad. Let's do a smell first. Okay, smell is whatever, but all right, here we go. Celcius, kiwi. It's just not that different to me than like soda. Like I don't taste the energy part of it. One bite, everyone knows the rules. Yeah, guys, look, I'm probably going to invest in this stupid drink because everyone's buying it. But I feel like I'm on an island, dude. It's just not. I wouldn't pick this over a Red Bull or a Monster is what I'm trying to say. And that is my kind of like defining factor of if an energy drink, like it's just like, it tastes like fruity seltzer, dude. It's just not. That's why I like it. It doesn't taste artificial. I don't know, man. Look, I respect it. I don't know. Maybe I've got something against these drinks. Like, I don't think the watermelon one's going to be that much better. We'll do this on Monday. But the thing about Red Bull and I'll say this one thing, then we'll move on. The thing about Red Bull and Monsters, when you taste them, I know you guys made fun of me yesterday for saying I taste the energy. I legitimately taste the energy, dude. I don't know what to tell you. I really do taste it. Here, I taste kiwi, which is not what I want. I want energy. I'm about to go to the gym after the stream, by the way. I'm going to look cool taking this to the gym and see if like it gives me more energy. But so far, it just tastes like carbonated water with kiwi. That's all. It's But look, I actually am getting close to investing to these guys, even if it's a very small portion of the portfolio. I'm seeing a broader bull case here as well as I've been doing research. And I think the Bank of America report that came down that downgraded them last week, Celcius, I think, is up 3% today. They messed up on one key component and of the report. And that's why I think there is a broader story here to Celcius. So I'll share that more. We'll talk about it next week. But in general, Celcius is not my cup of tea, but it is, not the worst thing in the world, I guess, for everyone who keeps buying this shit. Okay, so Bubba Davis says if you don't get some real pre-workout for the dang gym admit, I don't even know how to take pre-workout. I feel like that stuff is like even more intense than energy drink. I have to learn how to take that stuff. Okay, Robinhood's up 0.64%. Truist is up about 1%. Palantir is up 4%. By the way, you guys got to watch that new video I just put out on the Australian deal. It's a good video. We go deep into that deal, and I do my earnings preview before Q4, so make sure you check that out when you get a chance. That's up 4%. Google's recovering a little bit. It was at 139 today. Microsoft, look at Microsoft, 412. I mean, Microsoft was at 397 after earnings. Meta, 475, up 20%. We looked at the options. If you had February 9th expiring contracts, you're up 3,000% on those contracts. If you had 470, 480 strikes, even if you had 500 strikes, you were up fucking 800%. I mean, just insanity. Absolutely insanity of Meta. So shout out to the Meta shareholders today. John, I just saw you tweet doing the Celcius Kiwi test live with Amit right now. That's so cool. I love it. I got to show you guys this. This is why I have the iPad, dude, because this second screen right here, it lets me catch all the notifications, all the little notifs that I'm getting. So we got John here watching with me.
Okay, Kiwi, let's see it.
That's so cool, dude. That's so cool.
This better be good. All these drinks have been so bad. Let's do smell first.
I love that you're trying it with me for the first time. That's so awesome.
I don't know.
All right, here we go.
Oh, your voice is
Celcius
nice.
Kiwi.
All right, sip test.
Your voice is kind of seductive, bro. Oh my god. What did you say? Was it good? Was it bad?
I don't know.
What's my safety? I literally was like, I don't know, dude. I was like, what the fuck is this? This is not good. I love it. Okay, cool. So we saw all of that happen, and then we saw SoFi's up about 1.8%. Nvidia. Now, this is the thing that I don't know how to make sense of, and if someone knows how to make sense of it, please tell me. 661 up 5% on the day. It's just, I mean, look, it's big. It's big. It's a big day for Nvidia. Does it feel like a bubble? Of course. Does it feel like we're in a bubble? 1,000%. On Nvidia's valuation, it feels like we're in a bubble. It doesn't matter what I feel like. But does it matter? I guess not. Nvidia's PE is lower than Amazon's. Amazon's PE today is 87. Nvidia's PE is 53. And Nvidia has the growth to justify it. Nvidia's up 30% in the past month. I mean, look, the reason I think Nvidia's up right now is because Meta showed strong AI demand, Amazon showed strong AI demand, Microsoft, Google all showed strong AI demand. At that point, if all of that demand's coming from these damn GPUs, why would you sell it and why would you not buy it? Especially if you're an institutional investor playing with hundreds of millions of dollars, right? Like you and me might not want to get into it because, we might not have a position. But if you're an institutional investor that's going to flip it at 750, it's worth getting in at 661 if you think it's going to get to 750, or even if you think it's going to get to 700. So it makes sense that Nvidia's up. The SMH ETF is up 2% on the day. This is the biggest semiconductor ETF. If you just bought this ETF, you would be up basically 12% already for the year, just sitting back and really not having that much risk outside of the semis. S&P's at 495, folks. S&P's at 495. We got a very hot jobs report today. That jobs report was not that good, particularly because we added way more jobs than expected. Kind of a good news is bad news type of thing. And the market seemed to ignore it. The market seemed to just not care, which has been the really exciting part about this entire earnings. The market about this entire macro cycle with this earnings, which is the market kind of started to ignore some of this bad news. Snowflake's up 10% today. Wow. I didn't even see that. If that's any indication of Palantir's earnings, goodness gracious, why the hell is Snowflake? Hold on. Why is Snowflake $220 today? Like, what happened? Is there any news on Snowflake? Let me just Google Snowflake real quick. Snowflake stock. Like, why is it up 10%? Yeah, there's no news. No, I think there's some article saying that Snowflake's up after Amazon and Microsoft reported. So people are thinking there's more demand for Snowflake, I guess. Luke says, because I bought last week. All right. We need you to buy some more Palantir then. Wow. 10% on Snowflake. Snowflake is officially a $72 billion market cap company. Does it deserve to be worth $72 billion? I don't know. I don't know if it deserves to be. It's not even profitable. So, I mean, I know they can become profitable. I know they're growing at 30%, but that growth is declining. I don't know. I'm not trying to hate on Snowflake. I don't know if it deserves $72 billion. Enphase dipped below 100 again. Enphase, it's at 100 right now, but I got to 96 today, 98. Yeah, Enphase's been a mess, dude. And the thing about Meet Kevin's PP is that his PP is up right now. Why isn't it popping up? Meet Kevin. It should be popping up. Let me try to get it on Robinhood. His thing, his PP should be up right now because of the Nvidia investment, but the Tesla and Enphase investment must be sending it down. So, yeah, he's up 1% today. Meet Kevin should be up a lot more, dude. Meet Kevin should be up a lot more. He has a lot of Nvidia. The problem is he has a lot of Tesla and Enphase. So this is his holdings right here. Tesla's 20%, Nvidia's is 12%. So that Nvidia thing, that Nvidia average should be carrying him very high on the ETF. But then Enphase is 12%, Tesla's 19%. So you got, what is that? Basically 32% or something of the portfolio is Tesla and Enphase that have just been disgusting. And then he does have AMD, Intel, Nvidia, and then Apple's 5%. Apple shit the bed. Trade Desk is okay. Taiwan semis. Like, he has a lot of semis, which is good. But that Tesla and Enphase, if those Tesla and Enphase weightings went to Nvidia and AMD, Meet Kevin's ETF this year to date, instead of being down 4%, he would be up almost 15%. So, not the best for Meet Kevin. Shem Pasta says, amidst PP is up when Palantir and Robinhood go up. When those two go up, my PP will be very happy. Let's just say that. Juki says Enphase and Tesla will come back. Not worried. I agree. It's just, remember, Meet Kevin is a short-term fund manager. Even though he's investing for the long term, he has a fiduciary obligation to clients to make sure they keep their money in his ETF. And in the short term, you've got to keep convincing them that Enphase and Tesla will come back. Now, if it takes a year for them to come back, that's tough for the clients that invested, right? This is how an ETF works. But if they come back within the next 6 months with rate cuts, then it's great. And his DCAing will have paid off. This is the hard truth of managing money in the public markets. It's, one of those things that's actually very scary to do if you really aren't sure of what you're doing, because market cycles can last a long time. I mean, imagine if you were a fund manager and you shorted Nvidia. Remember that Everything Money guy? Does anyone have an update on him? Is he still short Nvidia? There's no way he covered his short. Now he has to have like an ego right here on Nvidia. There's no way he's covered his short now. There's no way. Apparently he used his brother's money as well while he was covering the short. That's wild, dude. If I was his brother, I don't even know what shorting is. I'd be like, wait a second. You said a company would go down at 200. You borrowed shares for that company. That company's now at 660. And we're at a ridiculous loss. Oh, what he did is he bought in the money. He sold in the money puts at like a 200 or 300 strike, if I'm not wrong, on Nvidia. And so as Nvidia climbs higher, he loses more money. He loses a lot of more money. So we'll see what happens. We'll see if he actually makes a video on that and says what happens. But so far, he's been pretty steadfast that Nvidia is a bubble. It's coming down, and maybe it is. We'll see. We'll see what happens, but maybe it's not. Maybe this AI shit is real. There were people on Twitter today saying, oh, this is a bubble. The growth. I mean, like, it could be a bubble in terms of valuation, but people were saying this is crypto 2021. This is not crypto 2021, dude. AI is real. This is not just random altcoins going up. I think this is real stuff that's happening. And I think that's why, the market is rewarding some of these companies. All right, February 2nd, 4 p.m. Friday. Thank you, everybody, for being here for the market close. Stock market is now closed. All right, so let's see where these companies ended out. And then we got a bunch of stuff to talk about in regards to what is happening in the broader market and some of the specifics on these companies, particularly the big seven. I wanted to go through a bunch of different ones of them. All right, so what do we got? We got Tesla down about a 1% today. Enphase down about 4%. Snowflake up again 10%. Don't know why, but Snowflake's up. Robinhood basically flat today. Truist up about 1%. Palantir 17. Look at that. We closed at 17. Not bad. Now we do have earnings after hours. So the closing date the time at 4 p.m. on Monday, this is not the last price we're going to see before earnings. So, but we closed at 17. Not bad for today. Supermicro 579, Netflix 564, Apple 185. The Apple Vision Pro launched today. I'm curious if anyone got the Vision Pro, if they went to the Apple store for the Vision Pro, or if they have any experience with the Vision Pro. I've been watching some videos on it. I definitely want to try it. I know I've been a little bit more bearish on the concept of the Vision Pro, but I do want to try it and see what it looks like. I'm definitely, I can't imagine buying it. $3,500 is just way too much. I just spent $2,500 on a MacBook. And every time I think of the use case, I think of, okay, so there's like 5 screens in front of my eyes. And then I just think of like sliding my fingers up on the trackpad. And I'm like, boom, I have 5 screens on the MacBook. You know, it just doesn't seem that different yet to me, but I do want to try it out and see what it feels like. Maybe my mind changes and we see what it looks like for Apple. But it seems like they're selling out of those, and there's long lines in the New York store, and they're going to have a successful launch, at least for today. 143 on Google. That's up about 0.5%. Microsoft 412. Meta 474. Again, up 20% of the day. Congrats to those who hold Meta. I asked a question on Twitter saying, why would you sell Meta? And pretty much everyone said there's no reason to. They have a dividend. If you're going to pay taxes on these gains, where are you going to allocate the capital that's better? And then remember, Meta was 394 yesterday. Meta's up 20%. I mean, to get Meta to drop 20%, you would have to have something go bad in the macro. There's like literally no reason to sell outside of maybe you really want to take some profits. Even if Meta goes down to 410 and you have an average below 300 or in the 350s, there's still not a reason you should have sold, right? Because we know Meta's not going away. We know the dividend's not going away. We know AI is not going anywhere. Like this is a multi-year growth story still for the big 7. And it just doesn't make sense to sell, which means if it doesn't make sense to sell, you've got all these institutions saying, shit, we're going to buy. And then you get this nice, juicy squeeze on Meta. They have moved $200 billion today in market cap. That is the largest gain in the history of the stock market. Now, also, people forget, Meta lost $200 billion in February 2022. So Meta lost a crap ton of money in February 2022. That was one of the worst days in the stock market for them. And today was one of the best days in the stock market because they got it. Mark Zuckerberg is going to get $700 million a year just off dividends based on the shares he owns. So, I mean, it just doesn't seem like there's a reason to sell Meta at all. And so congrats to Meta shareholders. Nvidia 661, AMD 177, SoFi 788. Remember New York Community Bank? We talked about them being down 35%. And I said, I don't know if this deserves to be down 35%. Today it's up 5%. And I've been doing some research in the regional banking sector. Me and Chris are going to talk about it a lot on Monday on our Macro Monday podcast. But maybe the fear of regional banks right now is a little overblown, and it's not as bad as March 2023 by any sense of the imagination. So we'll talk more about that on Monday. But seems like that's doing okay. TQQQ was up 5% today. Triple leverage QQQ fund. So that's up. Let's go to the actual Qs. The actual Qs were up probably, 2%? 429, up 1.69%. Snapchat reports on Monday. The reason Snap was up is because Meta advertising. Yeah, look, Snap's up 7% today. Meta advertising made it seem like Snap advertising is going to kick it out of the park. I actually think Snap's going to gain a crap ton of AI subscribers. They already have like 4 million that are paying $4 a month for like no reason, in my opinion, but they're paying $4 a month to like chat with some AI bot. So I think Snapchat's probably going to print on that. They're probably not going to be profitable. The stock-based compensation is going to be horrendous. But the stock's probably going to go up on Monday, just given the fact that their advertising earnings are going to be better than what the street expects. Given Meta was better than the street expected. BABA was down about 1% today. Okay, not bad. Robinhood 1092 and Palantir 1702. Palantir $17 right now after hours. Thomas says VR AR to us is going to be like our parents using smartphones. The next generation of kids are going to be big adopters. Maybe. I think it has to get to a really nice form factor for a lot of kids to adopt it. Right now, I don't really see the vision, but maybe our kids are the ones that really, really enjoy it. Let's take another sip of this Celcius and see if there's some more energy here. Yeah, dude, I don't like it. I would drink a Red Bull or Monster any day over that. I just don't get it. I feel like I want to get it because I feel like I'm on an island and like I feel like this is such a hype drink, but I don't see the hype. It just tastes like carbonated water with some flavor in it. And I don't feel the energy yet. Maybe when I go to work out after this, I'll get the energy, but I don't feel the energy. Growth Stock Wiz has a $185,000 Palantir position on Monday. I will either cry or smile. Well, Growth Stock, I know your average, and it's about $8. So I don't think you're going to be, whether it goes up or down, you're going to be fine because you have a very good margin of safety. Now, if you got a $16, $17 average, if it's bad, it's bad. If it's good, it'll be really good. So we'll see what happens. Jan Martin, thank you for the 17. I don't know what symbol that is, if that's a pound, a euro, or something else, but thank you for the super chat. Amit, thanks for your passionate speech at the end of the market open. You're a passionate guy with heart at a right place, with heart at the right place. You'll be going places. Thanks for what you do, and thanks a symbolic amount for Palantir. Yes, thank you so much, Jan, for that. We had a good market open in the morning, and it went much longer than expected. And at the end, the last 30 minutes, we had a nice little deep discussion. So if anyone wants to check that out, you can check it out later today. But that was fun. Thank you for everybody who was there. It was a really, really good one. Oh, it's Palantir stock price end of day. I love it. 1702. That's great. You sent a 1702 super chat. What can someone tell me what currency that is? It doesn't look like the pound. It looks like something from Asia or something. I don't know. It looks like that, but maybe I'm wrong. But thank you, man, for watching that part of the live stream, and thank you for everybody who stayed. I got a bunch of comments on that, so it was fun. It was a really, really good discussion. Okay, let's hear from Brad Gerster on what he thought on big tech earnings and his thoughts on Amazon, and let's see what he had to say as well. Oh, it's a euro. Okay, cool. It's a euro. Dope. It's a euro. That's awesome. So I was just like, I had no idea what it was. All right, here's Brad Gerster. Let's hear what he has to say.
Who we didn't get a chance to talk to yet. We'll come back to you in a second, Brad. You own this one, and this was extraordinary in its own right. Profit soaring to the highest level in 2 years. The trends were moving in different areas, and he's had to be his own magnifier of where they were going to deploy their CapEx and go more heavily towards AI and the opportunities that it might present. What's your read here?
Well, I give a tremendous amount of credit to Andy Jassy, Adam Selipsky, who runs AWS and the team over there. Remember, they're the market leader in cloud. We talk about them as somehow they're coming from behind. They've got a dominant retail business, which is going to benefit from AI. It's going to benefit through better targeting of ads, better targeting of merchandise. And I think that Jassy will continue to drive efficiency in that business. And then when you look at AWS, it's the market leader. A year ago, I was concerned, and some others were, whether or not Microsoft's early lead because of their partnership with OpenAI would cause a bunch of customers to leave Amazon and go to Azure in order to take advantage of the benefits of OpenAI. We didn't see that. We saw almost no customer churn. They signed the deal with Anthropic. Anthropic's on a tear. They're going to have models which are every bit as good, in the near term as ChatGPT 4 and 4.5 Turbo, et cetera. And so this is a great, healthy, competitive race in the landscape of models. Their customers are continuing to voraciously move their data into Amazon, many of them putting it on Snowflake in Amazon or Snowflake in Azure, by the way. But that's what we see. Everybody standing up their data and then leveraging new AI workloads. Remember, at the end of the day, just telescope way out for a second. What is this AI business all about? Right? The founders of Snowflake.
So then he goes on to talk about basically AI businesses are about cloud-based, are truly based on training models, and those models making your life more efficient, whether it's in the enterprise or in the consumer base. And all of that depends on the cloud. AWS, Azure, GCP, they're going to win on that. Now, so Brad's obviously bullish on Amazon. He's more bullish on Microsoft because he sees them as the cloud-based, essentially, epicenter, the equator of like where this all, really starts to grow. And Microsoft's Azure is growing 30% year over year. Absolutely incredible. AWS and Google are not growing that high. So that's why he's bullish on Amazon or bullish on Microsoft. But the core thing is that all these companies are going to get a lot of momentum. Now, this is big tech earnings after everything has happened so far. Okay. Will Sachin be on Palantir Weekly? I'll ask him. He was on like 2 weeks ago, so I don't know if he'll be on today. But we're gonna have Arnie, Matt, Vince, and Amir. Who actually Amir's been the most bearish about the valuation. He thinks Palantir is now undervalued, and he did a unique trick in his fancy DCF model to come up with the reasoning for why it's undervalued, and he's gonna go through that today. So it's gonna be a really good episode. He thinks it's now actually undervalued. He was saying fair value was $11.12. Now he thinks fair value is more 16, 17. Because of what he figured out. So we're going to talk about all that on the earnings. Okay, so big tech earnings. Meta PE is now 35. Microsoft PE is now 36. Apple PE is now 30. Amazon 83. Tesla PE 43. Google 25. So I feel like the street is getting this wrong with Google. I mean, look, you can buy any of these guys, and obviously you can buy Nvidia, and we will do well over the next 5 years, no matter which one of these we buy. But regardless, I think Google doing 86 billion in revenues, 20 billion in profits with 60 billion in buybacks doesn't justify for them to be 10, a decent 20 to 30% lower than every other company's PE. It just doesn't make sense to me. So I think either Google's going to give a dividend, or Google's going to do a share split, or Google's going to do more buybacks. You're going to have to do something, because right now this like weird dichotomy between Google being at such a low valuation compared to all of its peers, when they're not growing slower than any of them outside of Nvidia. I mean, for goodness sakes, Apple's growing at 2% year over year. They have a PE of 30. Google's at 25. Like, at some level, I don't think that's the worst thing. Thomas says, got to take into account growth. Yeah, their search business is growing 14% year over year. Everyone thought the search business was dead. It did $48 billion off search last quarter. The quarter before, I think they did $42 billion. They did $6 billion more in 90 days on search. I mean, the search business is not dead. Cloud is growing at 25%, even though it's, not that profitable yet. The profit margins are low, but it's going to get there. I just don't think it deserves to be this low. I don't think the growth at any sense of the capacity is justified to be that low. Gemini could be their smash hit. I agree. Right now, Gemini sucks. I've been using Gemini because I've been playing with models and it's not good, but eventually we'll get there. And, maybe Sundar is also the reason the street's not excited, but I don't think there is nothing structurally wrong about Google. I really thought about it a lot today when I was looking at these valuations, and I can't see what the structural problem is. Like Meta at 88, the structural problem was overweight, and maybe TikTok's a competitor. Those two things faded away. What is the structural competition with Google or problem with Google right now? LLMs are going to take away search. That hasn't happened, and it's not happening. Like, it's not happening anytime soon. Now, maybe if they keep missing these advertising numbers by 0.6% or whatever for the next 3 quarters, then you have a point. But I don't think LLMs are taking away from search. When you grow at 14% year over year, you're not, it's just not going away yet. And so we'll see what happens, but I don't think there's a bear case on Google that justifies the valuation at 25. You could say the macro is getting a little overheated and S&P is at all-time highs and we have to have a pullback, sure. But then the other 6 companies, excluding Tesla, cannot be at PEs that are a little bit higher than Google for not having that much more growth than Google. So we'll see. We'll see what happens. Have you used Perplexity for search? Yes. I don't like Perplexity that much, dude. I played with it. It's not that interesting. Perplexity, we talked about it on the channel. They raised like $500 million or $70 million. They have a $500 million valuation a couple of days ago. I know people are saying it's like their new default search engine and stuff, and I get it. The far majority of the world is not using Perplexity. They're not using ChatGPT for search. They're using Google. And that's just how it is right now. And until that changes, Google will have a monopoly and they will make a shit ton of money. It is what it is. So, and I don't think the market's taking that into account. And so we'll see what the market continues to say. But that is what we have on Google. Now let's talk about Meta. Here is what the dividend suggests about their growth. Let's get some analysis on that here.
Talked a lot about Meta today, surprising the street with its first ever dividend. Could this be a sign of mega caps maturing, and which others might be next? That's the focus of today's Tech Check with Deirdre Bosa. Happy Friday, Dee.
Hey, happy Friday, Carl. Well, you can look at Meta's dividend as part of a broader shift among tech over the last few years. It used to be that high growth tech companies, they invested every dollar of profit back into the business to develop the next generation of innovation. But higher interest rates and the push for profitability, that has led to more discipline, better cash flow, larger reserves, i.e. more money available to return to investors. So it got us thinking, could Meta's surprise dividend pressure Google and Amazon to do the same? Here's the state of capital returns among the big 6. Apple and Microsoft, they've had robust programs for years, but they've also been around the longest, and so they have more mature businesses. Meta is the youngest of the bunch here, and that is partly why its dividend was such a surprise. Now, Amazon has been around for nearly 30 years, yet it doesn't have any capital return program, but it didn't start posting consistent profits until 2015, when its high-margin AWS cloud computing unit started making up for narrow margins in e-commerce. Even then, it continued putting those profits back into the company, like doubling its logistics footprint over the pandemic. This quarter, though, everything seemed to start working for Amazon. Operating income soared, way better e-commerce margins, and interest income. That was kind of the cherry on top, an added benefit of higher yields on its growing cash pile. And that is a benefit among all the mega caps that have.
So the big thing about Meta giving a dividend is that Meta is the smallest out of these companies. When we talk about Google, Amazon, and Nvidia, or not Nvidia because they give a dividend, but Microsoft, to be able to say, hey, we're gonna issue out a dividend. And it was surprising. 50 cents is not a lot, but if you're an institution with millions of shares, 50 cents is a whole lot of money. 50 cents is a whole lot of money. And I think it can't be underestimated how much money that actually is, especially if you're collecting $2 a year just for sitting back and letting the money continue to pile up. So that's why it's really good for Meta, and that's why it's really good for a lot of institutional investors, and that's why the stock's up 20% and it's not selling off. It's literally not selling off. I mean, I think it hit 485 today, and now it's at 479 or whatever. But no one decided to take massive amounts of profits on Meta, and if they did, the dip was bought up. Broccoli says we need Gunjan back on the stream. I DM'd her. She's down to come back on the stream. She's just busy for the next couple weeks, so we'll probably get her in March. Earnings cycle is very busy for a Wall Street Journal reporter, so she'll be back on the stream soon. But we'll get her. I mean, what's your average on Google? So I have spreads. My average on the spreads is $9.80, which is $9.89, which is basically like a $135 price, $132 price on Google. And the goal is to get Google closer to that $200 range for the spreads to print really well. Okay, speaking of Google, let's discuss this. I'm very curious to see what you guys think about this. Very, very curious about this, okay? So we have some breaking news coming from Spotify this morning. Okay. Spotify has given Joe Rogan a $250 million deal for his podcast. Now, they gave him probably close to like $150 million in 2020. That's when he got the deal. That's when it, exclusive content became like this big thing of just like, oh, these podcasters are making a shit ton of money. But they are not making it exclusive to Spotify. The hit show can now be distributed broadly, including on YouTube, rather than exclusively on an audio streaming service. I mean, someone tell me if that makes any sense for Spotify. Like, I'm trying to figure out why Spotify thought this was a good idea. And I have my reasoning, and I'll go through that in a second, but I'm curious to hear what you guys have to say. Google wins, dude. Google absolutely wins. Now, why does Google win? So this is what I wrote on Twitter today. This should speak to YouTube's moat, okay? Joe probably went to the Spotify execs and was like, look, I'm missing out on tens of millions of eyeballs being exclusive. Remember that when Joe Rogan was on YouTube and there was no Spotify contract, his videos, his podcasts each got at least 5 million views. And that algorithm, that juicy YouTube algorithm that has 2.3 billion monthly active users, saw his thumbnails and titles in their feeds, and they clicked and they discovered Joe Rogan. The discoverability of YouTube is what podcasting writ large does not have, and what Spotify in particular does not have. So Joe Rogan went up to the execs and was like, hey, if you guys want to keep me, you guys gotta not only pay me, you have to let me stream exclusively on YouTube, or let me be away from Spotify. And so you guys are going to pay me for basically doing nothing. I'm going to post on YouTube. Yeah, I'll post on Spotify, but you'll pay me $250 million. By the way, he used to post on Spotify before he got this deal, just like, just like everybody posts on Spotify if you have any type of podcast. So now that they did this exclusive thing, he's raising the price, and he's not even giving them the benefit of being exclusive. So, and Spotify, in my opinion, was like, well, we really want you to be the audio home of your content, and we can't lose everyone who just subbed to Spotify. There were so many people in the comments today on Twitter that was like, oh, I just subscribed to Spotify for Joe Rogan, but now I'm canceling my subscription because if they don't have Joe Rogan, then why, why do I care? And so I think that's why they gave him the money. But my question is, will they still be the audio destination if people can just listen to it on YouTube? I don't know. So we'll see what happens, but big W for Google. They have to do nothing. They get millions of more people coming to YouTube, and they grow the $9 billion advertising business just on that platform alone because of Spotify giving up the exclusive rights to Joe Rogan. Now, why would Spotify do this? I think Spotify is in a little bit of a pickle, and I've been saying this for a very long time. Look, I know the stock has done well from June 2022. It was at $79. Now it's at $200. I think there's probably a bull case for the stock. The user growth is impeccable. They're probably going to add 30, 35 more million users in every quarter. I mean, this is a company that's been number one on the music apps on the iOS App Store. By the way, PayPal and Venmo were number 3 and number 5 today on the finance charts. This is a company that has never left number one on the music charts. YouTube Premium, by the way, came out yesterday. They said they have 100 million subscribers. And that's music and premium together. So YouTube's catching up, but Spotify's at 250 million premium now, 600 million users. They're probably going to get to 1 billion users, and they're probably going to figure out how to monetize. The problem is they don't make any money because all the money goes to the fucking record labels. They don't make any money, dude. They're barely profitable. And so you got to ask yourself, 250 million is not chump change. That's a decent amount of cash. And you're giving it to Joe Rogan. Is he actually bringing in more users? Well, he brought in close to, I think, 20 million new users from the estimates I saw over the past couple of years, given he was exclusive to Spotify. But now if it's on YouTube, I don't know. Is it actually going to help him? I think they basically said, hey, let's have Joe Rogan here because at least he doesn't leave. And at least, if people want to listen to the audio version, it's a really good way. And then they're going to control the ad sales and all that stuff. But that's not a reason to pay someone $250 million. Greatness says, I'm telling you, they are selling the rights to their platforms. They're basically his agent now for JRE. I don't think YouTube's paying for this, dude. They're not selling the rights to I think the whole point of this deal was to make sure, because YouTube wouldn't pay for this. YouTube, if they wanted to pay for Joe Rogan, they would have paid years ago. They don't give a shit about Joe Rogan. I mean, YouTube has enough content. Like they genuinely do not care about Joe Rogan. But it's not going to hurt them if Joe Rogan posts their podcast on the platform. So I think they're going to act as the ad distributor for the podcast, but they're not going to be the exclusive home. And my question is, yeah, you'll make some ad money on Joe Rogan's podcast, but then you're in like a serious Howard Stern type of deal. And that's not really tech company to me. That's media company. Tech company has a way different business model. And I don't know if this is that sustainable for Spotify. So as Growth Stock says, it's like going backwards. Yeah, dude, I would have paid Joe Rogan $500 million and said, no, you're exclusive. Like I would have given him $500 million and been like, dude, just like you're exclusive. Like just keep doing your thing for the next 5 years. You're exclusive for the next 3 years, whatever. But the fact that he gets to leave, and people are like, oh, he's only going to post clips on YouTube. No. If you go to the Joe Rogan channel, he's already posting clips. And in the description, they just like have the full link to the Spotify episode. The clips are marketing for the Spotify episode. But he's talking about distributing the entire thing on YouTube. And I mean, let me just go to his channel real quick. The Joe Rogan podcast, I mean, I'm sure you guys have consumed at least some of that podcast. If we go to the most popular episode, Tom Lee was just on CNBC. We'll go to him in a second. But if you guys go to some of these numbers, if you go to popular, look at these numbers, dude. 57 million views, 38 million views, 33 million views, 27 million views, 21 million, 20 million, 26 million, 26 million. I don't think Spotify was bringing these numbers for Joe. I don't think they were. Maybe they were getting him like 5 to 6 million downloads per episode, 10 million downloads, but you don't have an algorithm that can magically take a video from 0 to 57 million, which is the beauty of YouTube. It's the reason why YouTube is the best platform on the planet. Any video can go in front of anyone's feed. They don't have to know who you are. If the thumbnail title is interesting enough, they'll click, they'll discover you, and then, they can intimately engage with their content. Spotify doesn't have that. So I think Joe Rogan wanted that discoverability, and that's what he negotiated. And so this is really interesting. June says, hey, Amit, have you heard about the Powell interview airing on Sunday? I did, June. I did hear about that. And I actually made a meme about that on Twitter. And then we'll listen to Tom Lee. Let me pull that up. I thought I had a pretty good meme on that, quite frankly. But this was the meme. Okay, here we go. So Jerome Powell will be interviewed on 60 Minutes this Sunday. And I said 60 minutes of we'll see what the data says. That's funny. That's pretty funny. You can laugh. It's okay. It's okay to laugh at that one. That was good. Okay, let's see what Tom Lee has to say about this macro. He predicted it would go really well, and then he predicted we would see a little bit of a crash. Let's see what his thoughts are right now. There we go.
It takes us to our talk of the tape. What it will take to keep stocks moving even higher from here. Let's ask Fund Strat's managing partner and head of research, Tom Lee. He is with us live today. Tom, welcome back.
Thank you, Scott. Good to see you.
Yeah, you too. This is a remarkable market. What is driving this? And what is driving this continued acceleration as we hit this final stretch today?
Scott, I think 2024 is revealing the stock market is getting stronger because it is proving to be extremely resilient. Last week Tesla fell 11%. The S&P was up for the week. This week we had two big fangs miss and disappoint, and the market's of course roaring as we end the week. It's a 14th consecutive week. I think it has a lot to do with, one, the economy's incredibly resilient. The Fed, I think, has turned dovish. We don't know the timing of the first cut. Inflation, I think, is falling basically like a rock. And we know there's a lot of cash on the sidelines because there's over $6 trillion sitting in money markets. And yet the S&P, is just in the last 6 weeks generated more return than an entire year of owning money market cash.
Yeah, it's been unbelievable. So March doesn't matter. I mean, is that the lesson of this week?
Yes, I think. I think the bond market really cares whether it's May or March. I think that the stock market really should just care that the Fed has gone from fighting inflation and almost giving the economy a heart attack to one where they're trying to manage the business cycle. So if they don't feel comfortable doing this cut in March and instead of May, I don't think it should have any effect on equities and how they do today.
The interesting part, I guess, is what you allude to. It's sort of this change in focus of the Fed. And I think Chair Powell alluded to this as much in the news conference when he cited, I think on multiple occasions, the strength of the labor market is not necessarily a bad thing anymore, so to speak. They don't feel perhaps as though they need to really lean on that to get inflation to come down because they've been surprised to the degree that it's already been coming down.
That's right. I think the biggest evidence this week was the ECI, the Employment Cost Index. That number came in very tame, and Fed Chair Powell barely mentioned the labor market in the last press conference. I think it's because the job market is still adding jobs. I mean, today was a big surprise, but the unemployment rate's not really falling precipitously, and it's not creating a lot of wage pressure. So the market isn't going to be the source of the concern for the Fed.
So what he said right there is a really important point at the end. He said unemployment's not rising, but wage price inflation is not going up. And usually that's not the case. Usually if unemployment is staying stable, we should have some more inflation in wages, right? Because that means there's less competition for jobs, so employers have to pay more money. That's not really happening. And wage prices have gone up, but they've not gone up dramatically. And everyone still has the ability to find a job. I mean, it's quite literally, guys, we are living in just one of the most interesting economies of all time. We printed $7 trillion. Then we had inflation run up to 10%. Then we raised rates the fastest we've ever done, 0 to 5.5 in 40 years. We got inflation to come down from 10 to about probably 1.7% right now, but the Fed says about 3.2%. And we had a stock market that went from all-time highs to pretty bad lows to 2020 lows within 2 years, came right back up. Now is at all-time highs. We had just magnificent earnings from the biggest 7 companies in the world outside of Tesla. And their earnings were not the best. And we are somehow now here where stocks are up. We have massive amounts of jobs. Inflation is falling, as Tom Lee said, like a rock. And the Fed is doing all of this while keeping interest rates the highest they've ever been in 40 years. It's actually insane, dude. And that's why I believe Jay Powell is going to go down as one of the best Feds of all time if he can get us the real soft landing by the end of 2024 with interest rates coming down about 100 basis points. That would be reasonable. Maybe 125, 100 would be, I think, reasonable. And inflation coming down to about 2%. Like if he does that, come on, bro. That's incredible. I mean, you got to give it up to him. You've got to give it up to him. And then Bitcoin too. Bitcoin doubled in the past year as well, So, and maybe Bitcoin maybe that cycle for Bitcoin continues through the end of this year. I mean, we know a lot of us not forgot, but we haven't really talked that much about Bitcoin because it's been kind of dead. But if BTC gets closer to that 50,000 range, 60,000 range by the end of the year, this is going to be a very exciting year in a lot of different areas. Bitcoin right now, 43,000 that we're looking at here. So not too bad. Not too bad at all. What I was going to say here, Rafi says, I'm still buying in my Roth, but this market is capped AF. I agree. What I was going to say, I just remembered what I was going to say, is I want my Roth to turn into the YouTube portfolio. That's what I want to do. So right now, my entire Roth is in call options for, we know the stock, Robinhood. And so the goal is on February 13th, after their earnings, to sell the entire Roth. I think, given my strategic understanding of where the call options are and how I bought them, if Robinhood gets to $13-14, which I think is reasonable given their earnings, maybe I'm wrong. That's why we've got time on the call options. But if that does happen, we're going to double the money, or at least get 80 to 90% of the money. If that's the case, we're going to have a solid 30 grand to play with in the Roth IRA. And then I think we can make a legitimate YouTube portfolio on this channel. I think that would be super fun. Because now with that 30K, there would be 2 goals I have. Number 1, beat the S&P 500 together as a community. So all of us crowdsourcing a way to beat the S&P 500. And then number 2, you know, just have some fun with it. Like invest in cool companies, diversified companies. I like really spread out the portfolio and have it move on a daily basis, and so we can track it. So that's the idea, and seeing what we can do from there. And that's the goal. So, I mean, we'll see what happens after those Robinhood earnings and if they actually work out well. The benefit to doing options in your Roth, again, is that you don't have to pay taxes on them. So you can really take some risks, and if those risks work out well, you know, you don't have to pay any gains on the options. Amit, please sell us a course on how to open and close the market. Well, you need a cowbell, and then with the cowbell, you know. Victor says you're taking a lot of risk. Look, I know people say it's risky, dude, but I got the options very cheap. I bought them in my opinion, at the lows. I mean, given where Robinhood's at, I don't see Robinhood going back to $9 or $8 or $7. So if I think 10.30, 10.40 is the low, I got the bottom on these options. And it's an earnings pump play. Earnings pumps, even 11 to 20%. The options are going to go up around 30 to 100%, and we're going to cash out. And then even if we don't get a full 100%, we're going to have a good 20 grand to play with as a YouTube portfolio. And then we can like invest in Celcius in there. We can invest in, we don't need to invest in, we can put some in Palantir, but we already have Palantir. We can do like different things that are exciting for the YouTube portfolio. So that's the job. That's what we're going to do. And we'll see. Maybe it doesn't work out, but I think, you know, that's the play I'm doing for these earnings. I really do think these earnings are going to go well for Robinhood, just based on my due diligence. And maybe we can make some real money here. We'll see what happens. Okay, breaking news from the Wall Street Journal. The U.S. began a series of airstrikes on Iranian-backed militias in Syria and Iraq. The strikes followed a drone attack that killed U.S. troops in Jordan. So more wars. Perfect. Maybe if we wear the Vision Pro and we send ourselves to a tropical island, we'll not see the wars that are going on. And ironically, this piece is called The Headset Wars. Wow, look at that. All right, let's get an update on what's going on with the Vision Pro.
Put this on for the first time because it is a wow moment. It does feel magical. And as you're saying right now, you're seeing me, but if you were to start to operate in the operating system, get around there, you wouldn't need these, right? This is the Meta Quest 3. Right. These are controllers. You don't need these big clunky controllers and this headset to pair with it. You just use your hands. Right. And so you get around, you look at what you want to tap on, you tap in the air.
This is the most amazing part. And guys, I wish you guys could see this. So all you have to do is look up. Like I'm looking up and I'm clicking on things, and then I move my eyes, and now I'm clicking on the next one because I moved my eyes to the next. It's unbelievable.
Exactly. And that's really,
does it make you at all dizzy?
iPhone.
Oh, Becky wants in.
Does it make you? Only because does it make you at all dizzy, Andrew?
Not dizzy. No, I was in this yesterday for about an hour, and I'm not dizzy. I would say the only thing, my biggest downside, if there's a downside, is just the weight of it. I think after an hour, it was sort of enough for an hour, but I'd be very happy to put it back on again later. I don't know how you feel about that.
Look, I really pushed myself. My video review, I try to wear this thing for 24 hours. No one should do that at home. I warn you. Right. But the reason I did that was to try to push the device and see, the battery life and see what you could really do in here all day. I think the maximum really for most people is going to be 1 to 2 hours. And that's the length of a movie. But also I should say, if you're laying down and you're watching a movie, and you mentioned the airplane seat before.
Oh my God.
If you're laying down.
Wouldn't that be mind-blowing on an airplane?
Exactly. If you're laying down, and I've watched a full-length movie.
Yo, imagine the airplane's crashing and you're in the Vision Pro and you're on a tropical island and the airplane's fucking crashing and you just don't hear. Dude, that would be insane. And then next thing you know, they're like, where are we? Oh, this is like real heaven. This is not a tropical island anymore. This is what happened.
On here, you can go longer. And the real restriction's that battery right now. That battery you're wearing from your head, that's going to only last 2 to 3 hours.
Did you like watching? Do you prefer to watch a film in here than you would watch one on a big screen at home?
It's a tough question because the big screen at home is more of a collaborative experience. I can watch with my family.
It's not really that tough of a question. I think the answer is no. I think most people would say no, at least on this generation. But there might be some people that literally want something right in front of their eyes. I don't know who wants to watch a really good movie literally right in front of your eyes. I don't get that at all, but maybe some people do.
Here is a solo experience. It is isolating, but there are many times where you want to watch by yourself, when you're on a plane, when you're sick in bed, when your partner doesn't want to watch at that time and you're watching your series or You know, you've decided to
Right.
jump ahead in the series. And
Okay, so at $3,500 and possibly more because the case is about $200 and you might want some of the accessories and if you have glasses, I mean, there's a lot of, this is a pricey item.
there's some add-ons. There
Okay,
are absolutely
so
some
you
add-ons.
have the Oculus, the Quest over here,
This is the Quest 3.
the Quest 3.
Yep.
How much is that? What's the price tag on that?
This starts at $500.
Okay, so today, if you had an option between buying that and buying this, and I know that the Apple folks would say they're not in competition with that, and I'm sure the Meta people would say that they are not in competition with this at the moment.
Look, is it the same category? Absolutely. But this is really like looking at those early days where this is the BlackBerry and that is the iPhone. And that, look, there's a much bigger price gap right now. But when you put this one on first,
Right.
look through it.
Here.
Right? Well, this isn't powered on now, you know,
Okay.
the whole thing. But
Yeah.
look, feel it.
But
I mean,
right, the weight, I've used this before. I don't want you to throw it because I'm scared
we
that you'll.
should throw it live on air. Here we go.
Here we go.
But you will feel the difference.
Right.
And it's just not comparable. Yes, you can do more things actually right now in that Quest. You can play more games.
Right.
You can do a lot more things. But this is the platform that they're building on for the future.
So now, hold on, I got to close out of something because you're covered.
Yeah, but I've got
I don't
these
have
controllers.
the hands. I don't have the
and
hands.
this is the thing. I mean, you can set that up for hand tracking.
Right.
You can. It is nothing like that. It is.
That's a fair point, dude. Those controllers on the Meta Quest are clunky and weird. I will give Apple a lot of credit there. Tim Cook was on an interview today saying there was a just like an insane amount of machine learning that they had to develop in order to do the hand tracking and eye tracking technology. Meta cheaped out by giving you some controllers. At the end of the day, you know, Apple creates experiences and no experience involves a controller. Like that's just not it, right? So I think that is a selling point. It's just obviously the price is a lot bigger than Meta, but no one wants to hold controllers when they're doing this.
Is not as seamless as using the
Okay, so the question is, are you buying this for $3,500 today?
Am I personally?
Would you?
Look, I've been reviewing it. I have to say the big test for me now is if I'm going to miss using this. Yesterday, I worked in it for about an hour, 2 hours, and I preferred using this than the crappy monitor I have on my desk.
You did, right?
I did. I have been working in this a lot. I wrote my review in this. I've been writing my scripts in this. You can place windows everywhere. You get a bigger monitor. So for me, look, I haven't made the decision if I'm personally going to buy it yet. I will say that.
But that's a game changer.
Okay, the answer is no. She's trying to be nice because Apple gave her the exclusive coverage of the Vision Pro, and they gave her the ability to make this like these journalists. They need to maintain relationships with these companies. Okay, Wall Street Journal, storied brand. They reached out to Apple. Apple was like, "Hey, can you do a piece on this? We'll give you the." But like you know, they want to make. So she's trying to be objective here by saying that she would buy it, but also her heart can't say that. Like if you're gonna buy something, you're gonna say you're gonna buy something. Like you just know, right? You don't go wishy-washy. You either buy it or not. Do you want the iPad Pro? Yeah, I want it. Do I not want it? No, I don't want it. She does not want it, dude. That was not a raving, enthusiastic explanation that she wants it. And I think that's because she's struggling to figure out in that question, am I going to miss using this? And when she said my crappy monitor, I don't know what type of monitor she has, dude. Like I've got a great monitor. I don't think monitors have to be crappy. You can invest and get a nice monitor, and then you can use I just when I think of the spatial computing and 7 tabs in my face, I just think of a laptop. And maybe I have to experience it for me to change my mind. But I agree. I don't think she's gonna miss it, or at least that's the defining question of if you're gonna miss working in it for it to really be something you would pay for. Now, granted, as they change the design, they bring the price down and they make it more compact. That's going to work. And what I think that's going to really matter for is this company, Innovix. Innovix is the company, I believe, that is going to be able to help them build the batteries, not up 2.55% of the day, to actually make those Vision Pros sustainable without having to hold a battery pack and put it in your pocket. Maybe it's not Innovix. Maybe there's other battery companies that are out there. Obviously, there's a ton of people trying to fight for this. I don't think Apple's going to be able to build them themselves. I mean, there's a lot of work that comes into building sophisticated batteries. But Innovix is the company that is working on this exact use case for Apple, for something like a Vision Pro. Batteries that are on the device, that don't overheat, that actually are sustainable, and that work correctly. So we'll see what happens. But I think Innovix is actually the play if Apple figures this out, because I think they're the ones that are going to get all the orders from Apple, or they could be one of the ones that gets all the orders. So it'll be super interesting. The phone will become the computer and you can just plug the goggles into it. That's a good idea, right? Just sync it up with your Bluetooth. I mean, look, some of the videos I've seen look pretty cool. I'm not going to lie. They look cool. My question is just, would I use it every day? Like, I have 3 monitors right now. So I got a computer there, iPad there, Mac here, and then I got my phone right here. So I'm constantly looking at all 3 of these things, you know, as I'm working. For me to get rid of all of this, I would just have to put on the thingy, and then I would just be like doing this all day, right? I'm like looking there, and then I would have a virtual keyboard or whatever. I just don't know. I don't know if I would. I don't know if I would enjoy that. I really don't know. I definitely wouldn't pay $3,500 for it, dude. It's just way too much. Just way too much for now. When Vision Pro gets a little smaller and battery life, everyone will be wearing one. Maybe that's the bull case, right? And that's why the market is not destroying Apple on those crappy earnings right now. They're trusting that Vision Pro stuff will be okay, but maybe that's not going to happen. Now, granted, I was watching Marquez's MKBHD's reviews on it, and he said this actually feels like sci-fi. It actually feels like the Jetsons. It actually feels like this reality of just like, oh my God, like this stuff is moving right in front of us. And so maybe that's enticing enough to get people to use it every day. But so far, I don't know if people would use it literally every day. Let's get an update from, we heard Tom Lee on the bull case. Let's get an update on one of the bear cases for why the market may not have a catalyst to continue moving forward.
Now is Sarah Malik, who is Chief Investment Officer at Nuveen. And Sarah, how do we read this? A stronger economy, which has to be good news for stocks, but for anybody who was counting on a cut in interest rates, don't hold your breath.
Hi, Becky. So these employment numbers throw a monkey wrench into the disinflation narrative for 2 reasons. One, average higher hourly earnings, which are up 0.6%, and also the work week numbers, which are down 0.6%. So what does that mean for investors? Well, first of all, the Fed, it pushes out rate cuts likely till the second half of the year. Our call has only been for 3 to 4 rate cuts this year because of elongated inflation. Looking at the markets, tech has been leading here. We're just passing through the biggest week for tech earnings. My question is, what is the catalyst to take us further? It's going to be challenging unless market returns can broaden out, which I think will be a headwind and difficult for markets to do. And finally, we saw how fragile the markets can be this week. Just go back a couple of days when the FOMC threw water on that first March rate cut. Markets declined, and also with the mini banking crisis with New York Community Bank, we saw markets swiftly react negatively to that. All of that, I think, makes it tough for the market to find reasons to rally from here, especially given today's number.
Ron Krzyzewski was with us earlier.
Okay, so her argument is 10 years going up, markets getting to a point where it's just getting a little too hot. That jobs report is going to be tough on inflation. And so it's hard to see the catalyst that pushes us forward. You know, I get her argument, but then I look at a company like Nvidia and how the market is just willing to keep it going. And Nvidia hasn't even done earnings yet, guys. When are Nvidia earnings? Nvidia IR. When are their earnings? Their earnings are going to be, it's going to be February 21st. Oh, so we have a long time till Nvidia earnings. Okay, so we got about 20 days till Nvidia earnings. It'll be curious what price Nvidia's at on earnings. Right now, they're at 661 earnings. If these guys get to fucking 700, dude, and imagine they just jump to 800 after earnings because the growth is just that good. Like, it would be crazy. The sentiment has totally shifted on Nvidia. Nvidia is just one of those companies where the market's like, we need to own. And it's so crazy when sentiment shifts. This is what we're hoping for Palantir. Right now, sentiment sucks on Palantir. It's just, you know, and for good reason, right? The growth is not there, whatever, right? But they tripled last year. In order to get the next tripling, sentiment has to change. And once Palantir sustainably holds 20 plus, we're not going to be coming back down. And it's going to be the market recognizing, all right, you have to overpay a little bit, but that's okay. Just like in Nvidia. And even in Nvidia, you're not really overpaying necessarily, right? Given the growth is awesome. So we'll see. We will see what ends up happening. But right now it seems pretty exciting for Nvidia. It's like 1 monitor max for Vision Pro. So if you prefer 2, it's not for you. Yeah, and I know multiple people have there's multiple screens inside of the spatial computing screen, overall screen you're looking at, but it doesn't feel the same as looking at a real screen yet. At least not for me. All right, Palantir earnings are after the bell, not before the bell. Palantir earnings are after the bell. All right, I think that's it for us, folks. I'm going to go to the gym and go do the workout that I've been avoiding all day because I got to go do that. I'm going to look like a hipster going in with this Celcius and try to act like I'm cool. I don't see the vision behind this drink. I see the vision on the growth, but I don't like this drink, dude. I don't like these flavors. I'd much rather drink a Red Bull or a Monster. I just don't see it. But everyone else tells me I'm on an island. They love it. So if that's the case, I guess I'm an anomaly here. And seems like there's a bull case for Celcius. We'll look into buying Celcius in the YouTube portfolio, which will be the Roth IRA after Robinhood earnings. Hopefully that goes very well. And then we'll have plenty of money to be able to disperse around into these plays. And then we'll keep going from there. Okay. I think that's it for me. So last thing for today is Pounter Weekly, 11 p.m. Going to be a big episode. We'll be discussing everything going into earnings, review, all that stuff. And then Monday, we got earnings and we'll get into it. I mean, are you going live today? Yeah. Friday. Oh, by the way, I'm going live with TJ as well at 10. So TJ, 10 to 11, we'll be doing that options episode I told you guys about, episode number 3 of our series. And he bought a ton of, or he sold a ton of cash trade puts on Pounter. So we'll use that as an example. And then we will do Pounter Weekly 11 to 12. So we'll have 2 more live streams today on top of the 2 live streams we had and on top of the video that we dropped today. We are fucking working. Okay. Let me show you guys what it feels like to release a good video. Okay. So here's my iPad Pro. You see this right here, estimated 1 out of 10 on YouTube, 2.5 thousand views. That is what every YouTuber is trying to get. That 1 out of 10 every day. So you don't always get a 1 out of 10. You usually get it maybe twice a week if you're good. If you really figure it out, eventually you get to do it every day. But it's always nice when you get a nice 1 out of 10 on YouTube. That means out of the last 10 videos, this one is performing the best. So yeah, we got that video out. We got 2 live streams out today. We got 2 more coming. We are fucking working, baby. We are doing what we got to do. And let's just keep doing it. Why is TFC mooning? Where's TFC right now? Is it after hours? Is it moving? Oh shit. Why is it mooning? Holy guacamole. TFC's at 38.10. Did they announce the insurance sale? I think they might have announced it. Yeah, wait, no. This is old news though. Why is it mooning right now? Whoa, baby. Monday, those call options are going to print. You might as well call me what's the guy's name who made the printing press? Fuck, Benjamin. Damn, that was going to be such a good Benjamin Franklin. You might as well call me Benjamin Franklin, dude. Got the printing press. Damn, I wish I remembered his fucking name. That would have been good. Yeah, I guess it's I guess it's the insurance business. Yeah, the insurance business. They're selling it for $15 billion. It's official. It's official. There we go, folks. After hours, $38.10 on Truist. Not bad. Not bad. Not bad. So we'll see how that holds up going into Monday. The regional banking crisis, me and Chris will talk about it on Monday. It's not a crisis. And me and Chris were talking about it today. It's not as bad as what people thought in March 2023. So we'll go through all of that on Macro Mondays, which is our like macro podcast every week. And we'll spend a good hour breaking that down. Okay, cool. That's it. Thank you, everybody. I'll see you later today, 10 o'clock, and have a great, great Friday. I'm going to go to the gym and go act like I'm really cool with my Celcius. And if you follow me on Twitter, which if you don't follow me on Twitter, you need to follow me on Twitter because you'll see me post a picture of myself at the gym with my Celcius, okay? And you can like the picture. And all the comments under the picture will be, oh, this guy just goes to the gym and takes a picture and then leaves. And sometimes that happens, but the majority of the time I actually work out. And today is one of those days that I'm going to be working out. All right, everybody. Thank you. I'll see you guys at the gym with my fancy picture. Bye, everyone. See you later.